Let's start with your word of the day. Your word of the day today is inflection. What inflection are you seeing?
So inflection in terms of market leadership shifting from U.S. equities more towards international equities. Inflection also when it comes to movement of capital more away from cash, more towards dividend-paying companies. And inflection also when it comes to China, where their policy is changing more from control, more towards supporting growth.
Okay. I know you gave us these notes yesterday. I don't know if you gave us these notes before the NVIDIA OpenAI deal. It seems like so much of the momentum in this market is going towards the AI trade and tech trade. And in fact, just there's so much momentum in the market, which generally leads investors to do trades in higher beta stocks, a little bit riskier investments, if you will. Do you still think that investors are going to go into dividend stocks after what we heard yesterday from Jensen Huang and Sam Altman?
Well, the macro tailwind is very strong, right? We have like low rates, less regulation. Even with the big beautiful bill, you're seeing that the bonus depreciation is essentially reducing the effective corporate tax rate down to about 15%. So it's undeniable, the macro tailwind. But we do think that right now with rate cuts, we are going to start to get a pivot. And U.S. markets are doing well, but they are trading at premium valuations. So we would be looking towards more relative value areas.
All right. Your pick first today is the IXUS ETF. It's basically everything but America. So I was looking at the top holdings. There's some names like an ASML in there, some names that are tied to the tech trade. But generally, the top holdings are outside of the tech trade. And of course, they're outside of U.S. companies. Seen outperformance over the last year-to-date performance time frame, up 25% compared to the S&P, up about 14%. But don't you think there's going to be a catch-up trade in the U.S., especially when it comes to AI, because we continue to see these investments?
So we think that there's going to be, if you look at the leadership between international and U.S. markets, it goes through cycles. And now we've had 14 plus years where the U.S. markets have been outperforming. So we think that there's going to be a pivot there. Also, the advantage of investing in international markets from a diversification point of view is that when you're investing in U.S., the gains are concentrated in a handful of tech companies. When you go international, you're getting broader exposure. So from a risk-adjusted return point of view, I think there's a lot of attractive valuations there.
All right. I want to talk to you about the bond market. Coming up later today, we're going to hear from Fed Chair Jay Powell. Just very quickly, what are your expectations? Do you see it having an impact on the U.S. bond market?
Yes, so we do think that as far as that is concerned, the trend is going to be that rates are going to continue to go lower. And I think that's going to be a good tailwind when it comes to the housing market. The GDP multiplier on the housing market is very high. And overall, I think the theme is going to be that investors will shift their focus away from that 7.7 trillion that is sitting in the money markets and look for some good quality companies that pay a solid dividend.